All right, today we're going to dive into a stock that seems to have a bit of a split personality. I'm talking about IXHL. You see, on the surface, the price is telling a pretty bearish story. But if you look under the hood, the trading volume, well, it's screaming something completely different. So which story is the right one?
And that really gets to the heart of the mystery, doesn't it? When you see a stock in a downtrend, you have to wonder, is this a falling knife? Something you definitely don't want to try and catch? Or is it more like a coiled spring, just getting wound up for a big bounce? With IXHL, the crazy part is the data seems to be pointing in both directions at once.
Okay, so let's ground ourselves with the basic facts. The last closing price for IXHL was 0.404. Keep that number in your head, because it's basically ground zero for this entire puzzle we're about to piece together.
Now, to put that price into perspective, the stock is trading just over 10.5% above its 52-week low. And that, right there, is the first big clue for the bears. I mean, a stock that's barely off the mat, that's rarely a sign of strength,
And the technical indicators? They seem to be singing the same tune. Things like the ADX and Arun indicators, which are kind of like a GPS for a stock's trend, are both confirming that, yep, this thing is headed downhill. So the story the price chart is shouting is pretty clear. Weak downtrend. Case closed, right? Well, not so fast.
Because the moment you think you've got it all figured out, you look under the hood, and that's where we find this completely different story, the one being told by the trading volume.
And this is where you can see that conflict clear as day. On one side, you have the price story, which is telling us things are looking pretty bearish. But then on the other side, the volume is telling a much more bullish tale. It suggests that while the price has been dropping, some big players might be quietly buying up shares.
So let's follow that money trail. The on-balance volume, which is a great way to track buying and selling pressure, it's positive. The accumulation/distribution line, also showing positive momentum. What this all boils down to is pretty simple. Even as the price has been falling, somebody, somewhere, has been buying a lot.
And, the analysis we're looking at really hits the nail on the head here. When you see a ton of positive volume activity happening, while the price itself is going down, that's a classic signal. It often suggests a stock might be trying to find its floor. It's telling you that someone out there sees value at these prices, even if the broader market hasn't caught on yet.
So, where does that leave us? We've got a downtrend in price, but an uptrend in volume. The tiebreaker here should be momentum, right? It tells us which way the energy is actually flowing. So, let's take a look. And this is where things get even more confusing. Okay, so check this out. The MACD, it's showing that the downward push is actually losing steam. So that's a point for the bulls. But then you look at the RSI, and it's just dead neutral. And to make things even crazier, the stock RSI is flashing overbought for the very short term. It's a complete mixed bag of signals.
So what's the big takeaway from all this momentum data? Well, it looks like the sellers are getting tired. They're running out of gas. But the buyers, they haven't fully taken control yet. The downward engine is sputtering, but it hasn't started running in reverse. We're sort of stuck in neutral.
Okay, so enough with the abstract indicators. To really get a handle on what might happen next, we need to look at the chart itself. We need to find the specific price levels where the bulls and the bears are actually throwing punches. This is the battleground.
On one side, we've got the floor. This is the support level down at 0.363. Think of this like a line in the sand that the buyers are defending. Every time the price gets down to this level, they seem to step in and prop it up.
And then, on the other side, up above, you've got the ceiling. That's the resistance level at 0.429. This is the barrier that the sellers have put up. Anytime the price tries to climb past this point, they start selling and push it right back down. And where's our stock? It's stuck right in the middle of this no man's land. At 0.404, it is literally trapped between the buyer's floor and the seller's ceiling. Whichever way it breaks out of this range is going to tell us who wins the war.
So when you take all this conflicting evidence, the bearish price, the bullish volume, that neutral momentum, you can start to map out three possible futures for IXHL. This whole tug-of-war really creates three potential outcomes, right? The stock could finally break up, it could break down, or it could just get stuck grinding in the middle. So let's look at what the trigger would be for each of those scenarios.
First up, the bullish scenario. This one's pretty straightforward. All that positive volume we've been seeing, it finally overpowers the sellers. The price breaks decisively through that 0.429 ceiling, and that would be a huge signal that a new uptrend could be starting.
Then you've got the bearish scenario.
In this version of the story, that underlying downtrend just proves to be too strong. The buyers who are defending that 0.363 floor, they finally give up. The price breaks down, and that confirms that the bears are still firmly in charge.
And finally, there's the neutral scenario. This is basically a stalemate. Neither side can gain the upper hand, and so the stock just continues to bounce around between that floor and that ceiling, consolidating and just waiting for some kind of catalyst to shake things up.
So, after sifting through all this evidence, all these conflicting signals, what's the single most important takeaway? How do we make sense of this puzzle in a practical way?
Well, when you're in a situation that's this uncertain, one of the key things to think about is managing risk. And that brings us to the idea of a stop loss. For anyone who might not be familiar, it's really just a simple order you place to automatically sell a stock if it drops to a certain price. It's designed to limit your potential losses.
And that brings us to a really crucial point from the analysis. Given that battleground we just identified, the suggestion is to use that support level, that floor at 0.363, as a short-term stop loss. Why? Because if the stock breaks below that level, the bearish scenario becomes much, much more likely.
And that's really where we have to leave the story of IXHL for now, caught in this massive tug-of-war. The price chart says down, but the money flow says up. So the ultimate question really is, will the money flow win? We've explained the conflict, and now the market is going to have to write the ending.